Hello, everyone. Hope you had a wonderful trading week as well as a happy new year once again to everybody. Those of you that are new to the channel, welcome. Let's go ahead and just get right into it here with the dollar. First off, still following the outlook pretty well here. Didn't really get too high here. It did end up hitting around that 96.80 level, like I mentioned last week. So far, I believe that what we're going to see here is, another push possibly up in that 96.70 area, but ultimately the trajectory is still going to be to the downside here. Break below that 96, we're going to be heading on back down into test that 95.65 level, probably try to push into that 96 level again, and then ultimately start heading back down into that 94 level. So there's no real change here for the dollar that I'm seeing. The only change that would occur is if in fact it does get above that 96.80 level, might start squeezing to the upside. But again, I see that as highly unlikely at this time, and I still see further pressure and more chopping action between that 96 to that 96.70 level, and then ultimately a breakdown into that 95.65 level, retest 96, and then ultimately again start revisiting that lower level 94 level. So you are going to see some support, interim support along the way here near 95.13, with further again pressure to the downside into the lower 94 level. So not much to update here for I guess most of the pairs, to be honest. Let's just go ahead and jump into gold. Now, gold has seen a very strong move to the upside. I was looking for the lower 1505 to 1500 for a retest. There's a lot of interesting things that are happening in the metals market in general. There was a really good article posted on, and I don't do this often, but on zerohedge.com. If you're not familiar with it, pretty good place to go to get some interesting articles, things that you won't really see written anywhere else pertaining to the markets in general. Sometimes they lean a little bit more bearish, but from what I've seen is you take, like with anything else, like a grain of salt, you read into one thing versus another and you kind of come to your own conclusions. But very interesting article on there about gold. I think it's titled Gold 2020 Outlook. Somebody, I don't remember who it was that wrote the article, but very interesting stuff. And it kind of gives an explanation of what is happening with gold, the open interest situation, and why we may see an extreme acceleration to the upside for gold as things move into the future. So that all being said, just looking at our weekly time frame for gold here, spot gold specifically. As you can see, looking at our previous highs here near that 1913 area, all the way down to the lows here. That's my fib setup, just kind of going into the setup explanation. Now on Friday we ended up closing very strongly, and if anybody was paying attention to the futures prices, after 4 o'clock prices rallied back around $4.50. So again, we had some more interesting things, some tit for tat type of a situation with Trump and Iran kind of going back and forth, warning each other, this, that, and everything. Either way, escalation of tension breeds more fear into the market, more safe haven bidding to come into play. So what am I seeing for gold? Well, I believe that we're going to actually break the previous highs here that we put back in August, above that 1556 for sure. Start looking at the next fib level up here at the 61.8, which puts us at around that 1586, 1587 level, close to the 1600s, coming up sooner than expected, of course, but still further upside to come in the weeks to months that follow. After we do go ahead and start solidifying support around that 1590 area, 1600, then we'll look for the next area, which is going to be around that 1650, 1660 area, and ultimately start rising through 1700 and into the 1730s. So gold, still bullish on it. I do believe she has a lot more room to run. So I'm just going to go ahead and just say again that I do expect to see that break to the upside here. 1585, 1586s starts holding consolidation at that level. Further price appreciation in 1650s up into as high as the 1735s within probably the next few weeks. The way it's been moving recently, it really could see a large short squeeze on the break of that 1610-ish, 1615 level. That'll make it go pretty quickly to 1650, maybe even as high as 1700. So again, now is the time to be more, in my opinion, greedy on gold, as the rest of the crowd is still basically looking at the indices and whatnot. Safe havens are still very cheap in retrospect, in my opinion. Of course, everybody is entitled to their own. So I'm still looking for, again, 1600 upcoming very soon. 1585 near-term target. Look for consolidation at that level, and then further up to 1650, 1660s coming up pretty quickly. And as far as escalation goes with Iran and whatever else may be coming down the pike, um, it is just setting up to be a very, very fruitful environment for safe haven metals across the board. And specifically, as I mentioned, I think in last week's video, silver, in fact, did hold the $18 level, closed very strong, and thus is now in the process of doing a catch-up rally. And when you have that type of a situation of silver supporting gold's move to the upside, that leads to a monstrous move to the upside for both metals. In collaboration with each other. So that is a very good thing to see. And with silver, and don't usually cover silver, for all of you publicly, but silver, I'm looking at 19s near term, and then beyond that, looking at a substantial run back in the 21-22 area. So just to kind of share that with you all. So again, gold still looking pretty strong to the upside. I'm going to go ahead and just put in a little annotation here that we're going to be heading up into the 1650s. Again, as I mentioned earlier, there are a few other levels to keep in mind here, which is again that 1586, 1587 area starts consolidating here, and then you'll know that the next level to really see that action to break to the upside is at 1612, which will send us pretty quickly up into the 1650s to 1700s. So again, good place to be, in my opinion. That's where I'm playing, and my entire focus is basically on what gold is doing. So let's just go ahead and look at the futures price here, and I'll switch it if I need to. Don't remember if my fib level is set up here on the actual on this template specifically. That's what I meant to say. So same thing here as I mentioned. I was looking for that pullback to 1500. Please, again, if you do yourself a favor, have some time, go read that article, find it on Zero Hedge. Very, very informative information as to what's happening behind the scenes with regard to the suppression of physical gold versus the paper gold markets. If you're not even aware of what I'm talking about or regards to, good place to get that education as well. So again, I do believe we break here that 1566 level pretty quickly, and then we'll be looking at price action up into the 1590s here. Again, 1600, very well within sight. And then beyond that, just to kind of zoom out and scope a little bit, up into the 1660, 1670 level, and then beyond that up into the 17s, and we'll start running into some resistance just looking back in here. But again, after we do consolidate in this general range, then we'll be looking at gold going above that 1900 level and starting to really run as things move into the future. And this is going to take some time to develop, folks. Don't just say, okay, well, it's just going to be, a quick shot up into the 1700s and then 1900 thereafter. It could. Doubtful that it happens that quickly. Usually you'll see some consolidation in this type of vicinity. As we saw back in here, we saw a lot of jagged action here, or that chop action. So same type of expectations here, but near term, looking at conservatively, looking at that 1593 to 1600 level. And I did mention last week or the week before, I can't remember exactly, when I did the holiday video for everybody, which was that we were looking at 1603 as my target, and we're basically already getting very, very close to there already. So I'm still bullish on gold, and I do believe we have further upside to go. So I'm just going to go ahead and raise this up to at least near term 1595, but again, I'll raise it up just a little bit higher, up into that 1648 1650 level, just looking at this chart in general. So you kind of get the idea of what I'm saying here. Gold looking to the upside. So I'll just go ahead and save that for our references for next weekend. And we'll go ahead and switch it over to natural gas. Natural gas, there's really not a whole heck of a lot to say at this point in time. Still looking for the retest of the 203 level, which still has not happened. We did come close down to that 208 level. It's going to be kind of choppy in here. I expect to see some level of a decent bounce at that 203 level, and just looking at our daily time frame view, just to kind of zoom in a little bit for everybody, I would think that after we do hit that 203 level at 203, I don't know why I just said that twice, but whatever, 203, possible see a retest of that 214, 215 area. Doubtful that we get too much above that, with a possibility of revisiting the 220s, 222s. There is going to be a lot of overhead at this time. And then we'll be looking down a line, and I mean in the future, after we bottom out here, probably 203, a little rally up into the 220s, maybe going up to 230. Again, I'll update everybody by that time, in between what's happening, of course. So after we see that upside move off the double bottom, look for a reversal, test, and possibly break 203, in the coming weeks or months. So that's what I'm seeing as far as natural gas is concerned. And the big one, of course, is crude oil, which saw a pretty substantial jump in the geopolitical arena, so to say. That really gave it that push to the upside here. Now, crude is still looking pretty good here, I would say, for an upside move. And the best way to play this, in my opinion, of course, is on a longer term, like riding the wave, so to say. You want to see the price holding above that 63.65, 63.70 level for a further push to the upside here into the next resistance area, which is going to be around that 66.50, 66.60 area. And then we have one of two things that'll happen. Either she hits this level, pulls back, retests, and then basically fails and starts moving back down, which again is probably not something that we're going to see in the near term. I would say that the other opportunity that we'll see is probably a little bit of a profit taking here back to that 63.70 level to retest that, and then we'll be looking at another potential spike up into that 69 level. Again, if there's more escalation or if missiles or whatever is actually fired, then of course you're going to be seeing crude start spiking erratically to the upside. There's no ifs, ands, or buts about it. It's Middle East, there's a lot of oil out there. Who knows what could happen, and whatever may be the results of that action. If in fact that something like that did happen, then obviously we'll be looking at oil start really running above 76 and squeezing up even higher than that. But as far as our purposes near term, just looking at the overall fib levels, the next level, as I said, 66.50, 66.60, chopping around in here with an opportunity for a further push to the upside around 70. And if in fact there is a further escalation of actual material impact, such as missiles or whatever being exchanged, further bombings, whatever it may be, could lead the way for even a higher push. But again, the first level 66.50, 66.60s, and then beyond that, looking at that 69 to 70 level, and then probably looking at a little bit of a pullback at that time. But if in fact there is a further escalation, I mean, you're looking at 77. Around 77 or so to the upside, and then beyond that, possibly even more. So just to put that out there, make sure you're obviously, as always, protecting yourself, using your stop losses. We'll see what happens. Hopefully, things kind of calm down a little bit because, again, the situation with Iran, we're looking at this from the point of, making money, but, lives are obviously on the line as well in those areas as well. So just make sure you keep them in your prayers, and just kind of keep focused on what's happening with your family, friends, across seas, and hopefully things kind of calm down a little bit. But as far as what we're seeing here in the actual crude market, looking for that 63 70 area to hold support, then it's going to be up into that 66.50, 66.60 with a real potential to run up into 69.60 to 70 pretty quickly on the back of further escalation as well as fear in general. So that's what I see across the board here for dollar, gold, natural gas, and crude oil. If anybody has any questions, as always, you're more than welcome to reach out to me or leave a comment below the video, where you can reach out to me, thetradersperspective at gmail.com. Have a wonderful and green trading week.